February 20th, 2025 marked a pivotal moment for Pi Network, its mainnet launch. This highly anticipated event was met with a flurry of activity and conflicting data points. Some sources reported a price surge to $79.63, reflecting a 61.23% increase. The market cap reportedly ballooned to $1.9 billion, accompanied by a 128.36% surge in 24-hour trading volume. These figures painted a picture of early success. However, other sources presented a starkly different reality. Pi's price was reported at a modest 66.8 cents, with its all-time high reaching $330.65 back in December 2022. Discrepancies extended to the IOU price, which stood at $29, reflecting a 55% decline in just 24 hours. The conflicting data underscores the volatility and uncertainty that have shrouded Pi Network since its inception. The mainnet launch, while a significant milestone, did little to quell these uncertainties. Instead, it amplified the need for a nuanced understanding of the factors at play. The initial price fluctuations serve as a stark reminder that Pi's journey is far from predictable. The varying price reports highlight the challenges of establishing a clear valuation for Pi. The absence of listings on major exchanges further exacerbates this issue. Without the transparency and liquidity provided by established platforms, Pi's price remains susceptible to manipulation and speculation. The lack of a centralized order book allows for wider price discrepancies across different markets and data aggregators. This makes it difficult for investors and enthusiasts to gauge the true market sentiment surrounding Pi. The mainnet launch, while eagerly awaited, has only added to the complexity of evaluating Pi Network. The coming months will be crucial in determining whether Pi can overcome these initial hurdles and establish a more stable and transparent presence in the cryptocurrency market. Pi Network's price volatility is not merely a product of its recent mainnet launch, it's a recurring theme rooted in a combination of factors. One significant driver is the sheer volume of AI-powered price predictions, each offering a different outlook. ChatGPT, for instance, projects a range of $1 to $240 for 2025, expanding to $56 to $240 by 2028, and further to $106 to $399 by 2030. DeepSeek presents a more bullish outlook, placing Pi's value between $40 and $500 in 2025 and exceeding $500 by 2030. Coinpedia provides a more conservative estimate ranging from 50 cents to $2.50 in 2025 and $9.96 to $16.74 in 2030. However, they also acknowledge predictions from other sources like CoinCodex and Digital Coin Price, which present significantly higher figures. This range of predictions, often based on different methodologies and data sets, only adds to the confusion surrounding Pi's true potential. The lack of a unified price outlook makes it challenging for investors to make informed decisions. Adding to the price volatility is the uncertainty surrounding Pi Network's circulating supply. Unlike Bitcoin, which has a fixed supply cap of 21 million coins, Pi's supply mechanism remains unclear. The absence of a defined cap introduces a level of risk that many investors find concerning. The potential for an unlimited supply could lead to inflationary pressure, diminishing the value of Pi over time. This lack of scarcity, a cornerstone of many successful cryptocurrencies, raises questions about Pi's long-term viability as a store of value. The combination of fluctuating price predictions and an undefined supply mechanism creates a perfect storm for volatility. Until Pi Network addresses these fundamental issues, its price is likely to remain susceptible to wild swings. This uncertainty poses a significant challenge for those seeking to invest in Pi, making it a high-risk, high-reward proposition. Pi Network frequently touts its vast user base as a key indicator of its potential. However, a closer examination reveals discrepancies and uncertainties surrounding these numbers. While some sources claim Pi boasts over 60 million users, others report a more modest 35+ million engaged users. These discrepancies are further complicated by claims of 70 million onboarded users, a metric that lacks clarity and consistency. The lack of a standardized definition for an active or engaged user makes it difficult to assess the true size and engagement level of Pi's community. The wide range in reported user numbers raises concerns about the accuracy and reliability of these figures. It also brings into question the methodology used to calculate these metrics. Without transparency and consistency in reporting, it's challenging to determine the true scale of Pi Network's user base. This uncertainty makes it difficult to gauge the project's level of adoption and its potential impact on the cryptocurrency landscape. Further complicating matters are concerns about the authenticity of Pi's user base. Allegations of inflated numbers and bot activity have circulated within the cryptocurrency community. The ease of creating multiple accounts during Pi's pre-mainnet phase has fueled skepticism about the legitimacy of its user base. Some critics argue that a significant portion of Pi's reported users are either inactive or non-existent, artificially inflating the project's perceived popularity. This lack of trust in Pi's user metrics raises red flags for potential investors and casts a shadow over the project's claims of widespread adoption. While a large and active user base is undoubtedly an asset in the cryptocurrency world, Pi Network's lack of transparency and consistency in reporting raises more questions than answers. Until these concerns are addressed, the true size and engagement level of Pi's user base will remain a subject of debate and skepticism. Pi Network's future hangs in the balance, poised precariously between the promise of a boom and the threat of a bust. The project's potential for success hinges on a confluence of factors, many of which remain uncertain. On the one hand, Pi has garnered significant attention for its mobile-first approach to cryptocurrency mining. Its accessibility and low barrier to entry have attracted millions of users globally, particularly in regions with limited access to traditional banking and financial services. This widespread adoption, if genuine, could position Pi as a key player in driving cryptocurrency adoption among the unbanked and underbanked populations. Moreover, Pi Network's ambition to create a robust ecosystem of decentralized applications, or dApps, holds promise. A thriving dApp ecosystem could unlock new use cases for Pi, driving demand and increasing its value. The project's focus on building a user-friendly platform for everyday transactions could further contribute to its mainstream appeal. However, realizing this vision requires overcoming significant challenges, including attracting developers and building a compelling user experience that extends beyond simple mining. On the other hand, Pi Network faces a myriad of risks that could easily derail its progress. The lack of a defined supply cap and the potential for massive sell-offs once the coin is listed on major exchanges pose significant threats to its long-term value. The absence of a clear roadmap and concerns about the project's centralized control further fuel skepticism within the cryptocurrency community. Pi's success ultimately hinges on its ability to address these concerns and build trust with both users and investors. Drawing parallels to historical precedents, Pi Network's trajectory could mirror the rise and fall of countless other cryptocurrency projects that promised revolution but ultimately failed to deliver. Projects like OneCoin and BitConnect serve as stark reminders of the risks associated with hype-driven investments and the importance of due diligence. While Pi Network has garnered significant attention, it remains to be seen whether it can defy the odds and achieve its ambitious goals. Only time will tell whether Pi Network will revolutionize the financial landscape or fade into obscurity, becoming another cautionary tale in the volatile world of cryptocurrencies.